Welcome back, everyone. Another episode of my PrimeXBT educational series. If you have not used PrimeXBT or you're new to it, make sure you understand that it is a cross-margin exchange, and please be sure you know how cross-margin works. If you want to learn more about it, there is a tutorial video you can check out in this series. Otherwise, if you sign up with my link in the description below, you will get a 50% BTC deposit bonus. So if you deposit 1 Bitcoin, you will get 0.5 BTC as a bonus to use to increase your equity on the exchange for trading. But anyway, you guys, this video is very requested, and it's going to be about stop loss placement, how to place stop losses, where to place them, my personal stop loss usage, because everyone does it a little bit differently. But anyway, I really hope you find this video helpful, educational, and let's get into it. All right, guys, we are going to talk about stop losses here again. And why I say again is because I just recorded this video. My microphone was muted, so bit of entertainment for you guys here. I just want to say that on low time frames, I do use stop losses differently than I do on higher time frames. Most of you know I am a scalper. On low time frames, I usually use manual stop losses, and I rely on candle closes to make sure I don't get, stop hunted by a wick or something. But we're not going to go over that much today because you have to be very disciplined for that and actually close a position when you say you're going to close it and not let it turn into a big loser. It's very easy to do if you don't have an actual stop loss, to say, okay, if price goes above here, I'm going to close, and then you don't close and it keeps going up and your short is now way underwater, or your long is way underwater. So anyway, but if you watched my previous, one of my recent PrimeXBT videos, you'll remember I talked about shorting a lower high or longing a higher low is going to be one strategy. Now, there's a million different strategies, so your stop loss is going to be based on that specific strategy. And where your invalidation level is. So you always want to put your stop loss below an invalidation. All right. So anyway, let's just get into this. I see a clear lower high here. So we have a high, higher high, and then it turns into a lower high. Okay. And so what we're going to do here is, it's risky to short this. This is a very strong candle, very risky to short. And there's no wick rejection. There's usually some long wicks at the bottom and some long wicks at the top, right? So there's nothing here yet. Pretty risky short. You can see we consolidate and then we break out here and it rejects, and that becomes a wick high. So this becomes a very important candle, and we don't want to see price close above this level. All right. So I wouldn't want to see price close above there. And you can see what happens is that we retest this resistance level and we reject off of it. It becomes a lower high and we drop from there. So if I'm looking for a short at this level on the retest and I get into a short in this area, I would want to put my short at least just above this wick. All right. Now that's risky because sometimes the market likes to barely just wick above these areas, just barely go up there, poke all those people out that put their stop losses there, and then go back down. All right. Now, if you get in after this wick, then you're probably a little less likely. But anyway, so I usually like to give myself a little bit of cushion. So if I get in here, my stop loss is definitely going to be tighter and lower risk of loss, but also higher risk of being stopped out. So I usually give myself a little bit more cushion from my stop loss level. And if you also have been watching these series and have seen my risk management videos, you will know that if your stop loss is wider, you should be using a smaller position size. So I could use a little bit larger position if my stop loss is here. Got to go a little bit smaller if it's up here. All right. And now my risk to reward is off here, and I would at least want a little bit better risk to reward from this trade. And I would need to make sure it has a good target for me to get that. Okay. But anyway, so that's pretty much how that would look, you guys. I would literally just wait for a rejection here, or get in if I see a low time frame rejection, and I'm going to put my stop loss somewhere up here because we don't want to see price go above there. We definitely don't want to see it close above there. So a close above this level would have been an invalidation for me, and then I would have had to, I wouldn't be able to take that trade. So I can also just wait for these closes below and these rejections, and then, enter a short a little bit lower or whatever. So maybe I enter a short down here instead, and I put my stop loss still a little bit above here. Still ends up being a good risk to reward. Okay. Now this wick, this high volume candle, that's kind of the big key for my invalidation point. And so I'm always going to put my stop loss above an invalidation point. So if I'm taking a later short, let's say I didn't even short here and I'm wanting to short over here because again, we have a resistance level here. All right. This is a very high volume candle. We have a high volume wick rejection here. Okay. And so I could say enter a short here and I could put my stop loss above here if I want to, or I could put it above this wick high again because invalidation is technically here. So for me personally, I would put it here. I could even put it at the base of this candle, just above that. But again, I like to give myself a little space. So I would put it up here and I still have my good R to R, 1.5% risk, 5% reward. And that's acceptable for me on an R to R standpoint as well as invalidation standpoint. Again, high volume candle, nice big breakdown. It's actually a bearish engulfing candle. So invalidation is always going to be back above that candle. So pretty clear opportunity, clear invalidation level. You don't want to see Bitcoin make a higher high from here if you're going to be in a short. So that's how that would work. Pretty straightforward. Again, if I was shorting here, my stop loss invalidation is technically going to be all the way up here. Okay, so for 3%, and depending on my reward, maybe my reward is going to be down here at the next support level on my chart. All right, now these aren't trades we should be trading off of or anything right now. These aren't actual setups. I'm just kind of posting some ideas here. So that would be my true invalidation. Again, we have a high volume rejection. We also have this wick rejection here. So maybe even if I want, I could consider putting my stop loss here. And I probably would. I wouldn't really want to see stop price go above this level anyway. So I would probably put my stop loss a little around here. And again, it gives me a 1.5% risk and a almost 10% reward. So that's a great risk to reward area or ratio. So this is something I could consider taking as a trade based on all of the, attributes, I guess, from that. All right, so that's one way to do it based off lower highs or higher lows. So if I were longing down here, all right, we'll talk about the long side. So if I want to take a long here, obviously I have a breakdown, a nice wick down below. So I get a lower high here. Sorry, I get a higher low here. So if I want to take an entry on a long up to resistance, then I need to find a good risk to reward ratio. So maybe I do 0.9% risk, 2% reward. And you could see here that this wick and this wick are both the important ones, right? Okay. And the base of this candle body is important because it's a high volume candle. So the base of that's going to be important as well. Pretty risky to put your stop loss just below the base of that. As you can see here, that would not have worked out. You could have put it below this candle a little bit, but I would prefer to do it at least below this wick, if not below this wick. So I always say, like, this is my safe stop loss where I don't think I'll get wicked out. This is my semi-safe stop loss, and this is my risky stop loss. All right. So you have to weigh the risk to reward of these. And if you want to go a bigger size, you have to reduce your stop loss level. But also that increases your chances of getting stopped out. So many times I'll use a smaller position, widen my stop loss, and play it more safe. But again, you get a higher low there, so you're going to have a decent opportunity on a trade there. All right, so patterns is another way to do it. You're just going to basically, here, let's go down in time frames a little bit to the 2 hour so we can find some patterns. All right. So I do see a little bear flag type deal here. Okay. So price breaks down. We get this bear flag consolidation and we break down again. Now, am I going to short this resistance? I could short this resistance. Okay. Just like we talked about earlier, my invalidation would probably be above this candle breakdown, or this wick is a safe one. This is the medium risk one. Okay. Now, if I'm playing this pattern though, I actually have to wait, and I'm going to wait for a breakdown. So I get a breakdown. Maybe I'm going to go to lower time frames to actually find a retest there. Okay. And we don't have a retest, but that doesn't mean I still can't get in. All right. If I get in below the breakdown and I get a retest of my EMAs, I can still potentially get in on that trade. But where would I put my stop loss? Well, let's zoom in here. All right. And you could see that we have a nice rejection here and another rejection, and it's likely we're going to continue lower here. All right. After this breakdown. So if I just get in after this breakdown, all right, because we do have resistance here. So we broke down, retested the resistance, and went lower. So I'm at least going to put my stop loss here, if not above this wick, and my safe stop loss would be above the wick high there. Now, for the target on these, you're going to draw the pole, from top to bottom, and then the breakdown is going to be here, so that's going to be your target. So around 45,900-ish. And I'm going to go down here, so around there somewhere was my target. And you can see here I have a 1% risk, 2% reward. It's a great R to R again on this trade. I can take that. I shouldn't be stopped out here if I enter down here, and then clearly I wouldn't have been. So let's zoom out again and see if we can find any more pattern type plays. Let's see here. What do we have? Here we go. We have a rising wedge here. Again, this is another short pattern, just because we're at resistance up here, so we're seeing a lot more short opportunities. If we were down at support, we'd see more long opportunities. So here we have a rising wedge, all right? And rising wedge target is going to be from like the top to the bottom, so something like this, all right? And you can see my target is going to be 44,860-ish, 44,900, all right? So I'm going to zoom in here. And after breakdown, we get a retest. Great. So I will draw my resistance at that retest. I will put my short indicator on here. And I will say, all right, so this was a high volume. Whoops. This was a high volume rejection here. Okay. Nice wick high. Very nice wick high. We got a lot of wicks here, upper wicks, and we broke down. So clear invalidation levels. It's either going to be above this candle body as the moderate risk. Above this wick is going to be the high risk, and above this wick is going to be the low risk. So if I go above this wick, I don't get a very ideal R to R. So I'm actually going to drop it down and go probably above either this wick. I could go above this wick or the candle body. All right. So I at least need to go above this candle body. I always give myself a little extra cushion, so I'd probably do it about here. All right, this is where I'd do my stop loss. I'd get in somewhere here on this rejection, and my target would be down here. Nice 2-to-1 risk to reward. Everything looks great, and we just let it play out. So you can see how well that would have worked out. So anytime you have the patterns, the consolidation, or anytime you have the patterns, the invalidation is going to be basically on the other side of the pattern. So on the other side of that breakout or breakdown. So I'd love to find like a bull flag. Maybe we can call this a bull flag because it kind of is. And I bet on lower time frames it's more. A bull pennant, I should say. So here we're going to have a bull pennant. And I like to use a little bit tighter candle, like on the candle bodies here, like this. So this is how I would draw it. Everyone does it a little different. But anyway, so here's exactly how I do this. So I would see this bull flag here, or bull pennant, I should call it. And I'm going to take my target, boom, boom, breakout, boom, here. All right, so my target's going to be about 43.6. And so I would enter on this breakout. We get a retest. So I'm going to enter somewhere down on the retest area. So somewhere down here. My invalidation is basically going to be at the base below this candle, all right, because I don't want to see price go below this big, strong, bullish engulfing candle. Very strong candle. There's no way that price should go below that. Now, if I really want to, I can put my safe stop loss way down here below this wick because this is a really low one. We already retested it. There's no way that price should go below this, all right? There's no way that price should go below this. Very, very unlikely to go below here because you see we made a higher low now, right? So we made a higher low on this retest, and we went up from there. And it turned into a bullish engulfing. So you want to see a bullish engulfing have follow through after. So I would just drop it up here, get my target all the way up here, and you can see I have a 1.3 to 6.7% risk to reward. Turns out to be another great opportunity. And of course, these don't always work out, but when you take these opportunities over and over with good risk to reward, you're going to have small losses and big wins, and that's really how we win. Small losses, big wins, all right? So let's just look at this one. This is a higher low. Would we have gotten stopped out here? We don't know. Let's see. So here's the deal. if I'm entering here, maybe I get stopped out, right? If I'm entering here after this, maybe I don't get stopped out. Also, it's okay to re-enter if you think your idea is still valid. So let's say I do, like let's say there's obviously the low here, right? The wick low. We break up. We are now working on a higher low, okay? We're working on a higher low up here. Now, if I entered on this one, it's not a very long wick, but it's nice. It's not a green candle, so there's no reversal signs from that necessarily. But if I think we're going to bounce and I want to get an entry, and I'm FOMOing into a long entry, then let's just say I put my stop loss below this support, right? So this is support. Well, I'm going to put it below this wick. So I'm going to put it like right here, right? Well, I usually do, like I said, I give myself just a little bit of cushion. So technically, I might have been okay. All right, depending on my entry, depending on my stop loss, because my risk reward here is pretty good. Because I'm probably gonna look for a new high after this anyway. So something like this would still give me a good risk reward. It's a wider stop loss than we've used before. So maybe I am just gonna put it right below this and hope that we don't stop hunting people out, right? Well, you can see I get wicked out, took a 1.5% loss, but overall, all these other trades, I was having 6% potential profit or 4% potential profit or whatever. So you can take a couple losses and have 1 or 2 wins and still make up for that loss as long as your risk management's good. Okay. But you also notice here, we didn't retest support. So always that risk of retesting this major support. Like we were so close to 99 SMA, then we finally tapped it and that's when we bounced. All right. So anytime I'm putting a stop loss, like an entry, if I entered here, let's say I entered somewhere up here even, I'm always going to put my stop loss just below this because obviously like we could go to that support level. All right. Since we're just above it, there's always that chance of wicking down to it. So I'm always going to give myself that little extra cushion here. When there's a major support below the other major support. So like obviously this is very major area as I talked about before because we have these nice lower candles. Now, the one thing we don't have though, and I should talk about here quick, is we don't have a higher low. So technically we have lower low, lower low, lower low, right? So we don't have this higher low. So that's why you're seeing those kind of stop hunts. And that's going to get you wicked out a lot, you guys. When you get lower low, lower low, lower low, and you're not waiting for that higher low confirmation, you're going to get wicked out a lot more on these little stop hunts, all right? So it's best on a high time frame perspective and on a probability perspective to wait for that higher low if you're going to be trying to long. But yeah, you guys, I mean, that's how it's done. Just look for your invalidations. Again, like on this one, we actually never had a breakout. Okay. So we always want to wait for our breakouts. You can see here that if I did get in here early, right, this looks like a nice symmetrical triangle or a bull pennant or whatever. If I wanted to get in here early, which I don't like to get into trades early, but if I did, I would probably put my stop loss down here, right? Okay, and then my target would be the pull length or whatever. So I put my stop loss below invalidation, and you can see what happens after invalidation breaks is that you get a big drop. That always happens after invalidation because a lot of people have their stop losses there. People will start to sell there below that too, and then you have panic sellers, et cetera, et cetera. But that's just a nice quick example of waiting for a breakout, which gives you a more clear invalidation because right now you don't technically have a breakout, which doesn't really give you an invalidation, if that makes sense. Now, if I was shorting this and I wanted to put my invalidation, so let's say this is a breakdown of a symmetrical triangle and symmetrical triangle breakdown target, it's going to be from here to here. So I'm going to take this from here to here and it's going to be close to down there. So I wouldn't have shorted this because we actually had this breakdown and we closed back above it. So for me, I wouldn't have shorted that. But if I did, all right, if I was getting antsy and I think that's a real breakdown, then I would put my stop loss either above this candle as the more risky stop loss or above one of these wick rejections here as the more safe stop loss. All right. And I usually look at volume too. So this is like the highest volume candle. So I would want to put it at least above this candle body. So anyway, you guys, that's how I do stop losses. Oh, I guess there's an exit, so I guess you don't, or there's already an outro, so I guess you don't really need to show that last part. But anyway, so there it is. Yay video. Really hope you guys liked that video. Make sure to check out the other videos in the series, like and subscribe to my YouTube to catch future videos, and I will see you on Twitter. Peace.